Okay. Let's get started. Perfect. Let's remove everything first, and then we will do a technical analysis breakdown first, and then we'll move over to the fundamental side. It's going to be quite a heavy week from a fundamental perspective for equities, commodities, currencies, everything pretty much all across the board. All right, let's start off with US 30. We have bottom wick rejection, but I'm going to map out that previous resistance here on the weekly time frame, which is your 52,900. And then last week's candle open for the current resistance. The current weekly candle doesn't really have much of a volume, but it has only been really one full trading day so far. So we ended up closing out bullish on the last US 30 candle. There you go. So closed out bullish, and this is the area that I want to watch out for, where we had a gap up when the market opened up, and then we've also had 2 days of rejections right into that zone. So that's exactly where we're sitting at the moment, which is more like consolidation when you drop down to the lower time frames, even on the 1 hour time frame here. So you do have a pretty good range that you can still trade, but as long as you understand what's the limitation of your trade. So based off of the daily time frame, I know that I only have a range of about 143 points to the downside to catch if I can get price to continue breaking below this level right here. Other than that, this is pure consolidation. You don't have a trade here. So I'm going to set my alert at 53, almost 500, and then another one right underneath this hourly consolidation for a move down for about 143 points. Come over to NASDAQ. NASDAQ is your most simple zone-to-zone trade on the weekly time frame. So we're still going to map out the current weekly support, 28, I would do 800. Current weekly candles, top wick rejection. So that tells me what the range is for this week. And this is going to be the most volatile index of all three that we are looking at or even trading. And we'll get to that just a little bit. But off of the daily time frame, this is the main level that I'm watching for. If price continues to break below that, then the first target is going to be that 28,800. After that, it's going to be a push down into 28,400, which if you go back up to the weekly time frame, it's going to line up with the previous major support areas. So first target, 28,800, and the next target is going to be 28,800. Next target is going to be 28,400. Drop down to the 4 hour time frame. You got a little bit of a pullback. Rejections right into the previous resistance. Price trying to pull back down. So if we can get 30-minute, 15-minute candle closures below this area, continuation down, you have about a 200-point range to the downside. For a much cleaner sell with full confirmation, you have this entire range for about almost 400 points to the downside. Drop down to the 1 hour time frame, your no trade range is going to be right around here. Nothing in between. If price gives me a bottom wick, flips back up, continues pushing bullish into the zone, I don't have a trade. The key thing for NASDAQ is going to be having a 15-minute and 30-minute candle closures. Even if it's high volume time, even if it's New York session, no just 5-minute candle and then a continuation down, because you will easily become a wick in the current week. We're going to go through all the articles, we're going to go through all the economic data and everything like that. And I'll show you exactly why it is such a heavy day, especially for NASDAQ. So at the moment, because we are in Asian session, I'm going to set my alert down here as we go through the rest of the analysis. And above 29, almost 200 for those buys. right below 28,800 for that 400 point move to the downside for those sells. This is specifically your no trade zone. This is your quick little scalp as long as you understand what's the limitation of your trade, which is going to be that 28,800. Small caps. And all of these are not just for Asian session today. These are for London session, even New York session going into tomorrow. All right, looking at small caps, we have the previous resistance that price is holding on to, which is your 3,020. And then we also have this support, 2960. Come over to the daily time frame. We are now breaking below this daily consolidation. We're trying to break below that. So if we can continue below that, that's your perfect trade. When I see daily consolidation, I know that this is going to be a zone-to-zone trade because I can expect to see that price is going to consolidate here again. So for cleaner sells, it's going to be below that 29, almost 90 level. And then if I look to the left, all that is just messy price action. So your cleanest trade is going to come from price being able to break above its own hourly high and then a push back up bullish. Nothing in between. This in between is going to be your no trade range. Let's come over to commodities and then we'll go back to the currencies. Give me 1 second here. Okay. So we are on track for our 4th bullish week on gold. And first target here, we're pretty close to it, is going to be the 4,700 mark. We already broke above 4,600, which was a very key level. So first was 4,500. Then we had 4,600. I'm just going to map out the level and I'll show you guys as we drop down to lower time frames why these are so significant. So 4,500, which was that previous support area. And then the current resistance, 4,700. When we drop down to the daily time frame, this was the resistance of this daily consolidation at 4,600. We broke above that. We haven't really come back down, unlike, the 4,500 mark where you had a break and retest even on the daily. We haven't really gotten a break and retest here. So we had the institutional flows that came in around 2 weeks ago, right when the retail side was getting out. So retail had exited on a Friday when the institutions, the hedge funds, the sovereign funds, everyone was entering into gold. Now we are sitting in an environment where you have the FOMO traders coming in, especially from the retail side, and that they are the ones who are pushing price closer to the 4,700 mark. Now this is going to be a very key level because as we have core PCE that's coming out, as we have, let's go ahead and just pull this up here real quick. Core PCE, we also have the GDP data that's going to be coming out, prelim GDP on Wednesday. And then you have consumer sentiment, and then you also have Jackson Hole Symposium that's going to be coming out. All of these are going to be very important for gold, and especially for the dollar as well, to really just understand what's the trajectory of the monetary policy. If we can break above 4,700 and hold on to that, then we're headed back up into closer to the 4,900 marks right up top here. But before it can continue, either price has to consolidate here because you've had a massive run up for about 4 weeks now, or it needs to give you a pullback closer to the 4,600 marks or mid 4,600, and then a continuation back up bullish. Even if you're just looking at candle structures, you had consolidation for a couple of days, couple of weeks here, and then a continuation back up bullish. You got a nice break and retest here. That is the fuel for price to continue breaking past 4,600. After that, Monday's candle, this last daily candle made a nice range wick and then came back and kind of closed below this area. This new daily candle just started forming about 4 hours ago, about to tap into a very key level with no bottom wick, which tells you that it didn't even try grabbing that liquidity. When you come down to the 4-hour candle, you see how price has gapped up here. So that gap is eventually going to be filled in. And that's why you need the seller's liquidity to continue breaking past 4,700, or it will continue to consolidate right below this area as it has done here in the past. So you don't want to be jumping in immediately at the moment. And even if you're looking for quick retracement trades, you're still going to have really good trade opportunities here. If price breaks above 4,700, you're just looking for a break and retest. But if price rejects 4,700 and then pulls back down breaks below the previous hourly low, then you have your cleaner sell opportunities to the downside to come back into around 46.25, almost 46.30 area, which is its previous support. Grab that liquidity from this bit of a consolidation that's happening here, even on the 4-hour time frame, and then a continuation back up bullish. So you set your alert above 4,700. Now we have silver, which is going to do the same exact thing that gold does, but as soon as gold gets its run or that momentum, silver is going to be a lot more volatile to the upside. With silver, we have a bit bigger range or wider range here, coming up into 72, I would say 40, which there's those weekly wick rejections here to the left, to the upside. And then in terms of the major support levels, price has now broken above and maintained above that 67.2. $70 mark also is very significant here because that is where the previous weekly candles have rejected. And we saw mass accumulation right below that level too. So you come over to the daily time frame. Last daily candle closed almost weak bearish doji. And then we've seen wick rejections here in the past as well, resistance being held, and we had on Friday a nice rejection into the $70 mark, and then after that we haven't really been able to break the previous highs here just yet. What you can do, you can already tell based off of the daily time frame that this is going to be a major support level. As I drop down to lower time frames, because of how the candlesticks are already structuring here, I know that there's going to be consolidation. So that is my exact 4-hour support right here. I only have sells if price can continue breaking below these wicks, which is below that 68.50 mark, or buys above 70. And if buys do set in after this mass consolidation, then there's going to be a lot of volume to the upside, which is your clean move to come back up into the 71.50 and then 72.40 levels. Oil is what we're going to continue watching to really figure out the inflation expectations, and what Bessent is going to try to continue to talk about the press conferences. We're going to go over that in just a little bit, but more than that, what's going to happen at the Jackson Hole Symposium and the core PCE and all of that stuff. So right now we're hovering right above that 85 mark, which is really where you have the war that is escalating, but you don't have any real attacks, physical attacks from the US side, from Iran side. Like, you don't have a full-blown war just yet. The full-blown war, with the expectations of it continuing even longer, are going to happen when price starts jumping above that 90 mark, closer to the 100 mark. 100 was your peak war, and you had both sides that were attacking. You had other people who were basically stepping in. So there's a lot that's going on from a fundamental perspective that we still have to unpack here, that we're going to do here in just a little bit. Now with currencies, you've got GBP USD, which is holding onto your weekly consolidation resistance and even your monthly consolidation resistance. So when price starts to consolidate on higher time frames, just know that whenever it does break out of these levels, there's going to be a ton of volume. So there's no need for you to have FOMO. Every time price breaks past, weekly resistance or a daily resistance, just know that this is the simplest trade that you're going to end up getting, which is that zone-to-zone trades. If I know that price has already tapped into that monthly resistance, then the next candle will be bringing me back down. That's just historical price action here. And then you have fundamentals that are lining up, and that will accelerate these moves here. And so based off the weekly time frame, I'm going to map out the most recent support, the levels that price needs to break or tap into first. So you have your resistance at 1.365, and then you also have your support at 1.356. Drop down to the daily time frame. You have a little bit of consolidation that's going on here. If price can break below these areas, then you have those nice sell opportunities to come back down. You set your alert right down here, and you set your alert right above 1.365. You do not take a trade in the middle. That's a very small range. So this is going to be your swing trade opportunity. We do not have day trades or scalps on here just yet. Same thing with Euro USD, where it's consolidating on the monthly time frame. Drop down to the weekly, and here we have our weekly support for all these levels. Even here, that is that 1.16 level. Drop down to the daily, And on the daily, you have this support that price is holding on to, a previous resistance. If price can continue breaking below this, then we have a really nice range to the downside. Let's just check this out real quick for about 56 pips. If price breaks above this area, same thing, you still have a really good range to the upside that you can still day trade to the upside here for about 38, almost 40 pips to the upside here. So you set your alerts right above the zone, nothing in between. All right, GBP, JPY, all of the yen crosses are going to come back to the pre-intervention level. So those are your cleanest trades and your cleanest targets. 218.6. As we are breaking out of this multi-week, multi-month consolidation, as price was pretty much just grinding up higher. Come down to the daily time frame, price is setting up a really nice support right into these areas, trying to break the previous highs. As soon as price breaks the previous highs, you have a really good range to the upside for 139 pips. Sales will only happen if we start to see more conversations around Bank of Japan increasing their interest rates, trying to strengthen out the yen, but you still have 80 pips to the downside, nothing in between. So you set your alerts above those zones and below 216.5. All right, USD JPY is still giving you a bit of a room. It's still going to continue pushing back up bullish. That's just the sentiment across the board, where you have 159.8 and the current support for all of this sitting down here at 158. Drop down to the daily time frame. So price has already established a support down here, and anything in between this specific range is a no trade zone. You have nice trades to the upside for about 51 pips, or below this level for sells coming down for about 84 pips. So that's your technical analysis. Now let's get into our actual fundamental analysis. So let's start off with some articles first. Very first thing that we're looking at that I mentioned this morning as well in our live session was gold and the dollar debasement trade that is going to continue to run really throughout the week. That's almost on autopilot. Everything else besides gold was like oil, NASDAQ, Russell. Everything else was spending the day getting whipsawed by the gap between the escalation rhetoric with Bessent's actual Iran sanctions press conference that happened today, a tanker strike, and a Houthi attack, and what the market decided that the rhetoric was actually worth in dollars. So today was essentially sell the news day on nearly everything except for gold. Now, the very first thing that we're going to look up here is US telling its trade partners that they have to cut ties with Iran or they're going to get hit with sanctions. So today the press conference actually happened. Bessent held a press conference at 11 a.m. PST or 2 p.m. Eastern time, and he called it an economic D-Day campaign to isolate the Islamic Republic and end nearly 6 months of war. So economic D-Day campaign, economic onslaught, economic, whatever. He was just calling it a bunch of different names. And Trump is personally calling world leaders demanding that they cut Iran ties with Iran on a specific timeline or they're going to face unilateral punishment. The Treasury sanctioned more than 60 entities already, targeting 5 of Iran's most vital lifelines: digital assets, technology, gold, aviation, and shipping. He has also threatened to sanction a major financial institution over Iran ties by the end of this week. He didn't really name it, but he was asked directly if the U.S. would cut off major Chinese banks, and Bessent said that no one is above the reach of U.S. sanctions, but he wouldn't name China very specifically, saying that the approach is quite diplomacy for the moment. Now, the key thing here is that we've had a former Treasury official who called it just the threat of additional secondary sanctions under authorities Treasury has had since 2020. And on top of that, we see that we've had more economists basically coming out, more strategists coming out, more officials coming out and calling it more show than tell, with major questions that are outstanding at the moment. Namely, whether the US would actually risk its China trade truce to enforce this at the moment. We've also had a former US diplomat put it out pretty straightly that this isn't D-Day, this is just a warning that you're preparing D-Day. And then Iran's own lead negotiator also posted right after or right before Bessent spoke today that Americans know that no one buys their bombast, basically, and the S&P 500 actually fell further after the remarks came out. So let's take a look at equities across the board, but S&P 500 very specifically on the hourly time frame. So we've had the press conference that happened, and then after that, S&P 500 now starting to drop and continuing the drop as well. Small caps pretty much doing the same exact thing, where you had the press conference, not small caps, but NASDAQ doing the same exact thing and pushing back down. Small caps here. Here was the press conference, pushed up a little bit, but still kind of sitting in this zone here, that consolidation area. And then US 30 as well, which pushed up and kind of just sitting into the zone. So NASDAQ and S&P 500 are the ones that are showing the most volatility after Bessent's remarks. The dollar, on the other hand, let's bring that up here, caught a bit of a bid where it's still pushing back up. It's still kind of just maintaining into these areas, into more of a daily, 4-hour, and the hourly levels, previously consolidation levels here as well. But for now, this does not mean that we're expecting massive movements all across the board, because you're going to pair this up with actually what ends up happening. So the market has already heard a lot of these things, back and forth oscillations, the speeches, the press conferences, but they want to know the exact details. Like I said, there's a lot of strategists who are saying that there's a lot of questions, major questions that are outstanding. So the market right now is processing this as more of a show than a tell. Exactly how a lot of the economists and strategists have already said this. And then this morning, we also looked at articles where Iran's currency was sitting at a record low. Iran's economy minister admits that the country is facing daily gasoline shortfalls of about 14 to 15 million liters. And there were two separate physical incidents today. A tanker struck near, I forgot the exact name of it, but it was struck near, I think it was like Shisha, Oman, inside Hormuz, the UK Navy, and Houthis separately claiming a strike on a Saudi supertanker in the Red Sea. So we've had two incidents, and we're basically seeing that the market is starting to price those in, as we're starting to see oil pushing back up and kind of just maintaining above the 85 levels here too. And then after that, to pull this up, we have actual oil news or developments that are coming out. So the important thing here is that oil actually fell on the day that Bessent announced the Iran sanctions, the opposite of what we would really expect with geopolitics, increasing or escalating and then oil pushing back up. Instead, oil came back down even on the hourly time frame and hovering around this 85 level, just right above it. Like I said, the market is not really pricing this in as a full-blown war at the moment. Just more of, there's a lot of conversations, a lot of press conferences, a lot of tweets, a lot of social media stuff that's going on, but the market really wants to see what is physically happening here. And the real reason from this is also that there's a lot of buildup around the announcement with Bessent's press conference, but what we ended up getting was more of a warning about where policy is heading than an immediate shock to the physical supply of oil. Until secondary sanctions really start changing, who can buy, who can ship, who can finance Iranian oil, traders don't really have much of a reason to add another geopolitical premium to already a market that is struggling to figure out the directions, that is fighting headlines versus physical supply. So we have to be very careful for that, because the fundamental case for oil really has not broken here at all. But today's specific headline didn't deliver the physical supply shock that the market really wanted or was preparing for over the weekend for this press conference. So it really sold off just on that disappointment, but still consolidating here. But we're still seeing that the institutions are still structurally positioned long here on oil, which has not changed. And that's the real divergence that, we want to keep in mind because the retail side is still net selling USO or oil, while the institutional options flow stays quietly bullish. Total Energy's own CEO said that traders are buying crude at about 50 to 60 barrel per barrel discounts inside the Gulf at the moment. So the real physical market risk premium, it's still very much alive here, but the setup is the sensitive part. We're still sitting right above our invalidation point for US oil very specifically. That is anywhere from 85 to really 84 level. So we're still sitting about $1 above our invalidation levels at the moment. If we see that oil drops further down in Asian session or even London session, and it actually continues closing candles on the hourly time frame, 30-minute candle time frames below that 84 level, that's where the invalidation comes in. Other than that, the targets here, as long as price is maintaining above 85, it's going to be first 90, then it's going to be 95, and then after that, 100 is the peak war. But other than that, we're going to be fluctuating between the 85 to the 95 level here. The bar to get there basically has just gotten higher though. It now needs an actual confirmed disruption, like a real Hormuz incident with physical impact or a named bank sanction that actually changes who can buy Iranian crude, not just another, rhetorical escalation that's happening. And for gold, very specifically, the reason why I still have this wide zone, the reason why I think that we need retracements or consolidation, the reason why I think that, we're not going to just continue blasting through 4,700 like we did with 4,600 is because it's already up about 14% in August, and it's on pace for the best month since September 1999. And today's Iran sanctions explicitly named gold as one of the 5 targeted networks, which, if anything, reinforces the dollar debasement and slash the hard assets thesis rather than threatening it. But at the moment, we are still seeing from our data points that institutions are still rolling calls for GLD very specifically. Let's go ahead and just pull that up here. Pullbacks to 420 zone for GLD are the institutional buy opportunities. So we still have huge call buying that's happening between that 415 to 435 level with September strikes, and institutions are rolling and they're not exiting at the moment. So this is your structural bid, not, blow off top. And it's the same exact thing that we're looking at this morning as well. So in terms of our trading levels, that's the reason why I want to see price tap into 4,700. I don't want to take the trade up to 4,700 just yet because this is still a level of consolidation to the left, whether you're looking at a 30-minute time frame, a 1-hour time frame, or a 4-hour time frame. So what I want to see is a pullback closer to the mid 4600s, so closer to this little support area, let's say 4650, 4640 area, and then continue back up bullish or consolidate right below this area of 4700 and then continue breaking past that. Invalidation of those buys are going to be as soon as price breaks below this 46 almost 30, let's say 4620 range, and then pulls back down below that 4600 mark. So the first target here is 4700 first. We're just below it at the moment, but as soon as that breaks, then the next key levels, you come back up to the 4-hour time frame, is going to be around that 4750 mark and then 4800. Ultimately, I am targeting for a longer term position trade going into 4,900 marks, but that's only if the dollar debasement and Iran stories both keep compounding into the Jackson Hole Symposium. That's going to happen later this week. Silver is going to do the same exact thing that gold is doing. Right now, it's consolidating right below that 70 mark. It's waiting on that signal basically from gold that it can break past that 4,700 mark and then a continuation up to the upside. If we can break past this, if we can get that signal, then the first area of target is going to be around 71, 71.50, and then a continuation up into 72.40 level. If gold strength eventually pulled silver up with it, but it's not confirmed as of right now, as we're seeing consolidation on silver, and then also when you drop down to 30-minute, 15-minute time frames, we're waiting for pullbacks from the 4,700 mark as well. When we look at equities very specifically, let's go ahead. Actually, we do have some short volume that's starting to kick in for gold and silver. So gold and silver short volume spiking while price is near highs. These are short sellers who are stepping in as retail FOMO is peaking at the moment. So you don't want to be jumping in when the retail traders are jumping in with FOMO trades at all. So let's continue up here for, all right around here, our price action for our equities. And then right below that, we're going to take a look at our options data as well. So the Dow, currently it's holding above what they're calling the MAs. We're not using that, but basically I'm using this to understand that it's still holding up strong. We still have nice bullish momentum here. The main thing is NASDAQ that got hit pretty hard. That's the weakest one that we're looking at the moment. That and S&P 500. So NASDAQ is the one that's kind of pushing. With Dow and Russell, we saw that kind of sitting into the zones still. So we're waiting for those levels to be broken. With NASDAQ, it was not really a broad sell-off. It was more of a chip-specific route. Nvidia fell for the 7th straight session, its longest losing streak since 2022, on a report that some of its biggest customers were notified of the AI-related price hikes above 15%. So that's a completely different story than the demand weakness. It's more of an AI pricing power, AI capex concern story. And we're also seeing that a lot of the strategists, a lot of the people who are sitting at the equity desk, they're just calling it more of a growing sense that AI adoption has peaked. It's sapping risk appetite at the moment. So that changes the framing for Nvidia's print on Wednesday that Nvidia isn't coiled quietly into earnings. It's already selling off hard into it. So you don't want to hold Nvidia unhedged at the moment through Wednesday very specifically. But whatever happens with Nvidia will be a large impact all across the board for all equities, and mainly because that is going to be more of an AI story. Now, Nvidia, like all the other stocks that we saw that were reporting during the earnings season, just meeting the expectations or being just above it, it's not enough. Nvidia has to really just beat the expectations and have an amazing outlook and kind of just show that the AI demand is still very much in play. And matter of fact, there's a lot more room to grow. If it's just meeting the expectations, that's not going to be enough. With small caps, very specifically, which is your Russell sitting in that consolidation that we're seeing. Let's come back here real quick. It's sitting right below those weekly and daily consolidation levels, sitting right into the support areas of that. So it hasn't completely started its entire bullish trend here just yet. It's just sitting in that consolidation at the moment. Now, the key thing here is that the market itself narrowed the range tonight instead of resolving it into either direction, right? And if you look at IWM very specifically, let's go ahead and pull that up. That is the previous weekly and the daily resistance areas. You just had a supply zone that was hit, but right underneath that consolidation area, you have another demand zone. So this is the reason why we're still just waiting for price to pull back down and actually break those levels so it can continue down. The same exact zone is being shared by the 4-hour. And on the 1-hour, we have some buyers who are defending this short term at the moment. So basically, when you're trading Russell or if you're trading IWM, you want to be specifically waiting for these 4-hour and 1-hour support resistance levels to be broken instead of looking for a trade here, trying to jump on any sort of high volume momentum, especially during New York session. You want those clean candle closures and then a continuation here. So you don't want to size Russell directionally until you're seeing either the resistance or the support levels being broken here, which is the same exact thing, as this morning. It's just that we're sitting in a tighter box at the moment. And this is still one of those assets where you have the retail side that is continuously negative while we have the institutions that are still buying this up at the moment. Right here. Institutional coiling, retail selling, options flow mildly bullish at the moment. Small caps benefit from rate cut expectations more than large caps. If Warsh during this Jackson Hole Symposium signals any sort of rate stability, not a hike, then IWM could bounce sharply here. So wait for your levels, wait for the levels to be broken, and then a continuation for your trade. Please do not just jump in because that is a mistake that most retail traders will be making. All right, so we have institutions that are positioned for a bounce on IWM at the moment. Another key thing that I want to go over during the options flow here was these specific calls that are being placed. So while the institution's options flow is still net bullish, we still have an 1.8 million September call at that $302 call buy, with the 1.9 million January 2028 280 put being sold rather than bought. So that's basically someone that's giving up the downside protection. A mildly bullish tell at the moment, not a bearish signal that it might look like when we're looking at our technical side as price is pushing down. So very easily people would get stuck on the wrong side of the trade, hence wait for your candle closures at the moment. Right now the retail side is kind of just busy chasing gold at the moment. The same week that the short volume in gold is spiking, as we just saw from the data side. Now, the next thing that we have is Bank of Japan. Any questions so far? Everything makes sense? Okay, cool. All right, so looking at Bank of Japan then, this is some more new developments. They're also going to be at the Jackson Hole Symposium, so this is important to watch. So we had a former BOJ board member saying that Bank of Japan will probably hike its policy rate at the September 18th meeting, with markets already pricing close to 70 to 80% odds of that as of today, and a possible follow-up hike as early as January as well. So in his own words, he has said that Bank of Japan at the moment is pretty much boxed in, and the markets have fully priced in a hike. If Bank of Japan does not hike, then that is going to be a surprise to the market, and that is where you will see that the yen could weaken sharply again. So that adds to the technical layer that we already saw with a lot of the yen crosses, which we're seeing that GBP JPY and USD JPY from a technical perspective are holding on to nice support levels to come back to the pre-intervention levels already. Bessent has been explicitly pushing Bank of Japan's governor here to raise rates from the US side. Japan's core inflation accelerated to 1.8% in July, which is a second straight monthly pickup, with the Mideast conflict now visibly driving import cost inflation into an energy import dependent economy already. So if we see that US oil continues pushing above that 85 mark, that is also going to be weakening the yen. We also have Bank of Japan that could ultimately have to hit close to that 2.75%, which is well above the 1.5% target that they have set at the moment. So that is the overall consensus that we're looking at the moment. The setup for next 2 weeks is that we get a confirmed Bank of Japan hike path, which is going to firm up the yen structurally, while a hawkish wash at the Jackson Hole Symposium on Friday is going to push the US yields up and weaken the yen. So those two forces are basically pointing in opposite directions on the same pair, and that tension is exactly why we have USD JPY at the moment ranging, but as soon as we get more clarity, you're going to get massive pushes that are going to happen here. Same exact thing with GBP JPY consolidation, but as soon as you get confirmation during the Jackson Hole Symposium, you can expect to see massive pushes that are going to happen here. We haven't had any alert hits at the moment, so we're just going to continue on with our analysis. And again, this is analysis that you're going to use for London session and even for New York session tomorrow, even though we're going to have our live session tomorrow already. All right, next thing that we want to look at is going to be US and Canada. All right, so as of late last week, we're looking at some optimism with US and Canada, but we see that the trade talks have collapsed after last-minute pressure from Commerce Secretary, according to people familiar with the matter, leaving President Trump to impose new tariffs. So the talks have very specifically collapsed over medium and heavy-duty truck tariffs with Canada. Canada thought that the vehicle tariffs were being cut to 15% from 25% across the board. The US said that the cut only applied to light vehicles, and that distinction directly threatened GM and Ford plants in Ontario. Commerce Secretary also pushed back on the framework at the last minute, so Canada thought that they had a deal as of Friday night, which fell apart anyway. So Trump is now also threatening to double the tariff on Canadian autos and parts starting in 2027. The Canadian ministers have already announced their formal response, they're going to formally announce their responses tomorrow. But as of right now, this is the kind of headline that can move the dollar and the risk sentiment broadly overnight. But at the moment, in Asian session, we don't have much that we can do based off of just this headline here. Now, for the remainder of the week, we have a ton that's going to be happening. Our biggest opportunity still being gold. Pull back a little bit and then a continuation back up. So pullback longs on XAU, 4650, 4700 spot, and then a continuation back up. Retail is wrong on US oil. Iran threatening to close Hormuz, plus Houthi attacks on Saudi tankers, plus US sanctions on Iran oil networks, plus Baker. Rig count declining, supply squeeze at the moment. Retail side is net selling USO. Institutions are positioning via news flow, which is structurally bullish at the moment. So long oil on dips. Iran escalation is a near-term catalyst. Bessent explicitly sanctioned Iran's oil sector today. Crypto is basically a squeeze that's going on. That's another area that we're seeing a lot of FOMO, retail traders who are jumping in again. But at the moment, if Warsh is hawkish on Thursday or on Friday, actually, it's just supposed to be Friday, then you're going to see that the yields will rise and Bitcoin could flush to 72 to 74K. That flush is the institutional entry zone here at the moment. The Clarity Act has not been voted upon just yet. That's going to happen on September 15th, which is the potential U.S. government Bitcoin accumulation. Trump has already signaled that. And then we have ETF inflows that are re-accelerating, but the bull thesis is only intact above the 70K mark if we can continue to hold on to that. But as of right now, it seems like Bitcoin still needs to breathe, so it needs to pull back down first. The big key thing here is going to be Nvidia's earnings that are going to be coming out on Wednesday. And that is the same day where you're going to get the core PCE coming out and the prelim GDP that's going to be coming out. So you're going to get growth rate expectations here from GDP, and then inflation data points are going to come out from the core PCE, and then Nvidia, which is setting up the board for equities all across the board. All right, so Bessent to sanction major financial institution. We don't know what it is, but we're going to find out tomorrow. That's going to impact oil, gold, spike. On Wednesday, you have Nvidia, CRM, CrowdStrike earnings are going to be coming out. That's going to set up the direction for NASDAQ, Jackson Hole. All markets are going to be affected by that. And then we end off the week with Clarity Act momentum, White House crypto updates. That's going to be your Bitcoin catalyst here. So bottom line, our main things is gold. We're waiting for that pullback. We're pretty close to the 4,700 mark. So pull back into the 4,650, closer to the 4,670, basically into this consolidation and then a push back up. That's still the cleanest trade across the board. And then silver, it's going to do the same thing that gold does. We're just waiting for the break above that area and then a continuation back up bullish. With oil, we have invalidations below the 84 mark. So we just now broken below the 85 mark, but anywhere in between here, that's your no trade range anyways. Invalidations only below 84. For Dow, we are waiting for price to break above the 53, almost 500 mark, and then a continuation back up. NASDAQ, do not hold this if you're trying to swing trade this. Don't hold this unhedged through Wednesday. Nvidia walked into earnings this week already down about 7 straight sessions. So it's not quite coiling that's happening, right? That's active pullbacks that you're already starting to see so that institutions can get in at cheaper prices. Small caps is already consolidating, so we already looked at that as well, the institutional levels. The single biggest risk into today's Asian session is oil sitting one bad print from invalidation while Iran story is generally escalating underneath, which is going to be a real mismatch here. So that gap has to close in one direction or the other, and then you'll see that oil can move fast, pretty fast overnight here. So that is pretty much it. All across the board, we don't really have anything that's really hitting our alerts at the moment, but you could get better movement, especially on the JPY crosses, in about an hour or so. And same thing with oil. So that's it. I will see you guys for Asian session tomorrow at 5 p.m. PST or 8 p.m. Eastern time. And then Wednesday we have our New York session, and then Thursday we have our Asian session.